The EURUSD pair closed the week with a bearish momentum, although the loss was not significant. The indecisive direction from the U.S. employment report increased the possibility that the Fed would raise the rate again in the coming quarter. However, the better-than-expected unemployment report, with annual earnings of a 4.4% increase in July, became a matter to follow. The EURUSD price closed bearish for 4 consecutive weeks, although the price remained above the 1.090 psychological threshold. However, the daily price shows a corrective downside pressure, signaling that the US dollar might be exhausted. In the weekly chart, the price is still trying to hold momentum at the 61.8% Fibonacci retracement level from 1.1275 high to 1.0833 low. Also, a bullish rebound is visible from the 20 simple moving average level. The 100 SMA is below this structure, which indicates a limitation to the downside possibilities. On the daily chart, the bearish is preferable as the price trades below the 20-day SMA level. As the price bottomed at the 1.091 level, a bearish break could increase the downside possibility toward the 1.0830 level. The alternative approach is to look at the price action at the 1.106 zone, as a bullish pressure above this area could increase the price towards the 1.112 zone.